Good morning to all traders and welcome to this week's first market science video on the US equities. We're going to see the S&P and the index as well. Despite the fact that it is Columbus Day today and it is a bank holiday, of course, we still are going to analyze what is really happening in the markets, what happened by Friday's close, so that we can prepare for a busy week. Now, it's not going to be as volatile as one would expect because the debate between Trump and Biden has been moved to October 22nd now, following Trump's rejection. He declined actually to virtually go on a debate against Biden. There is concerns, of course, after him being tested positive with COVID. Not many people want to be around him as well. So you can imagine now the volatility that we're expected to see coming through in this week is probably going to move. That doesn't necessarily mean that we're not going to see the markets being volatile this week. We still are going to, because we are a few weeks only ahead of the presidential election. There is the dollar weakening as well, and that seems to suggest that markets are expecting a Biden win because Biden is a bit more friendly for fiscal stimulus and funding in general. So that might be one of the reasons the equities are being supported. There is also some sort of positive talks around pharmaceutical companies after, of course, as well, Trump being able to just get an antidote within 3 days and feel just fine, claiming also immunity from COVID ahead of the presidential election. We're going to see how this pans out. Now, regardless, this today is going to be obviously a quiet session, I believe, because the US is going to be closed. That doesn't necessarily mean we're not going to see some action on other pairs. Now, on what other headlines we should be paying attention for this week, October 15th was also a deadline for Brexit. Now, obviously, I doubt we're going to see anything happening around that. And I think as Saturday is going to continue escalating, the tensions are going to continue escalating. We have to wait and see as well what's happening on that end. Now, there is a lot of data to take into consideration this week. We'll have the German Jew in the EU tomorrow. GBP data for the UK were very bad on Friday. But if we just shift to the US, we're expecting the manufacturing services to provide an important outlook on the country's momentum, on the economy's momentum. And of course, we are expecting to see whether the index is going to break to fresh highs, which would probably mean the US index might break to fresh lows. Now, what our waves are telling us over here. Now, when I start with the S&P, I've been looking at this move as well as the end of this impulsive 5-wave move to the upside, right? And I've been looking at this as an ABC for a W, X, and Y pattern, right? So I'm looking at more downside. I actually was looking more downside. Now, this looks like an ABC to me, right? All around 2, 3, 4, 5. Either way, it means that we've done a downside move here. It's completed. This, for now, it can also look as an impulse to the upside, right? So it could be a case where this is wave 1 and we're going to see 2, 3, 4, and 5. And this is going to lead us to fresh highs. Or it could be a case where this is simply an A, then it's going to be a B, and then we're going to have another move to the upside, wave C. Okay, short one, obviously, miss the previous high and then start moving lower to continue with this original ABC zigzag. Actually, I'm looking at for the S&P. Now, the other scenario I'm looking for the S&P is also that this is indeed an expanded flat, right? Which seems to suggest that we are still in wave. Actually, we're heading down after this move to the upside to complete B. We're going to be heading down for wave C of 4, okay? And then look for prices to move back higher. Now, that means we are here in an ABC pattern, right? It hasn't finished, of course, yet, because we've done waves 1, 2, 3, and 4, and we are expecting a 1, 2, 3, 4, and 5 wave to go all the way up to around, well, let's actually have a quick look where. to around the 3850, which is the 38.2 Fibonacci extension for wave B. And then we're going to move lower down either for a running flat, which is around the 2471, or for an expanded flat, which is going to be around the 1442. Now jumping quickly on the US index, and I want to quickly show you here that what we've been expecting for a while now is actually coming into place. We've had waves 1, 2, 3, and 4 completed. I'm waiting for wave 5 in the intermediate degree, but this is going to be wave 3 of the primary degree. Now, wave 4 came in as an expanded flat. We finished wave 4. We ended it just below the 95 big figure, which is also a cluster, okay? It's not just the 61.8 of waves A and B of the expanded flat. It's also the 50 Fibonacci extension of the full wave down from the 97.78 to the 91.73, right? So this is a very big level. Now we are moving down impulsively. That's probably 1 and 2. We are in the midst of impulse wave 3. We're going to see 4 and then 5. I believe we can go down to the 90.46. This is the 100 Fibonacci extension of, of waves 1 and 2, right, in the primary degree. So that is going to bring us to around the 90 level. And from there, we should be looking, of course, for further clues to decide whether we're going to go up for wave 4 and then 5, or we're going to continue lower for an extended wave 3, and then start considering longs for a wave for correction. Okay, so thank you very much for watching, and if you have any questions or if you have an alternative scenario, please do not hesitate to comment, and I'll get back to you as soon as I can.